March 27th came and went. No announcement, no headlines, no approval. And right now, a lot of retail investors are sitting there wondering if they got played, if this channel got it wrong, if the whole XRP institutional thesis just quietly collapsed while nobody was watching. I'm going to give you something most creators in this space won't. A straight answer. Here's what actually happened on March 27th. Here's what it means for your position. And here's the news that dropped today, April 1st, that Wall Street is hoping you're too distracted to notice. Stay with me, because what I'm about to show you doesn't break the thesis. It confirms it. And the window you need to understand, it's still open. Let me be precise about something most people in this space got completely wrong, including some of the biggest crypto channels on YouTube. March 27th was not the approval deadline for the 7-spot XRP ETFs we covered in this series. Those 7 ETFs, filed by Canary Capital, Bitwise, 21 Shares, Wisdom Tree, CoinShares, Franklin Templeton, and Grayscale, those already launched between September and December of 2025. They are live, they are trading, they have absorbed $1.44 billion in institutional capital. March 27th was the SEC's 240-day maximum review deadline for a second batch of newer XRP ETF applications. Applications that came in later after the first wave was already approved and operating. So when you heard nothing happened on March 27th, what you were actually hearing was the first domino sequence completed months ago, and the second sequence is now mid-fall. The retail narrative said the deadline was the event. The institutional reality is the deadline was a procedural step in a longer approval cycle that is already happening. Understand that distinction, because everything else I'm about to show you depends on it. So what did the SEC actually do on March 27th? The most likely outcome, and the one that aligns with every historical precedent in this space, is an extension of the review period. Not an approval, not a denial, an extension. This is exactly how Bitcoin's first ETF cycle played out. Applications came in, deadlines passed, review periods extended, and then, after the procedural process ran its course, approval came. And when it did, it was not a trickle. It was a flood. $164 million on day one. A 35-day consecutive inflow streak. $154 million from Goldman Sachs alone, confirmed in their 13F filing. That is the Bitcoin ETF playbook. And if you look at the current regulatory environment, post-Clean 16, post-Clarity Act advancement, post-SEC task force formation, there is no credible argument that the outcome for XRP looks worse than it did for Bitcoin. The question was never if. The question has always been when. And the when is closer today than it was on March 26th. Let me show you what the current XRP ETF landscape actually looks like, because this is what the nothing happened narrative completely misses. 7-spot XRP ETFs are actively trading right now, today, as you're watching this video. Combined inflows, $1.44 billion. Day one launch inflows, $164 million. Consecutive daily inflow streak, 35 days. Goldman Sachs confirmed position, $154 million. And here's the number that should stop every retail investor cold. XRP's circulating float dropped from 4 billion coins to 2.6 billion coins. That is a 35% supply reduction. Now add $1.44 billion in ETF demand on top of a 2.6 billion coin float at current prices near $1.40, run that math. The $3 billion ETF threshold that Canary Capital CEO Stephen McClurg identified, the BlackRock trigger level, would absorb approximately 80% of XRP's entire available float into institutional custody. That supply compression is not a theory. It is an arithmetic reality. And it is happening in slow motion right now. While XRP sits 61% below its all-time high of $3.65. The institutions are not waiting for retail to figure this out. They are positioning while retail is distracted by deadlines that already passed. Now here is where I need you to pay very close attention, because while every crypto commentator was watching March 27th, something happened today that is arguably more significant for XRP's long-term institutional infrastructure than any single ETF approval date. Today, April 1st, 2026, the OCC's final rule on national trust bank activities officially took effect. The Office of the Comptroller of the Currency, the federal regulator that oversees national banks in the United States, just finalized rules governing what national trust banks can do in the digital asset space. What does that mean for Ripple? Ripple has been pursuing a national trust bank charter. With today's OCC rule now in effect, Ripple is operating within a regulatory framework that positions it closer to a national banking institution than any cryptocurrency company in the history of this industry. Think about what that means. Not a crypto exchange, not a blockchain startup, a company with the regulatory standing of a national trust bank, running on XRP's ledger, with 7 spot ETFs already absorbing its native asset into institutional custody. This is not a speculative future. This is the architecture that just went live today. And most retail investors are still arguing about whether March 27th was a disappointment. If you're just finding this channel, what you're watching is institutional grade crypto research built for retail investors who refuse to be left behind. This is the smart money ecosystem. Hit subscribe right now, because what I'm about to cover in the next section, the Clarity Act timeline and the Bloomberg probability that most analysts won't say out loud, is where this gets real. Let's talk about the Clarity Act, because I want to be more precise here than I was in part 1. The Clarity Act has not been signed into law. A viewer called that out in the comments, and they were right. And I respect that kind of sharp engagement. It's exactly what this channel is built for. Here is what has happened. The Clarity Act has advanced through committee with bipartisan support in direct response to the March 17th joint SEC-CFTC ruling that established the Clean 16 framework. It is no longer a political long shot. It is the legislative follow-through to a regulatory ruling that already happened. Ripple CEO Brad Garlinghouse has publicly stated a 90% probability of the Clarity Act passing by the end of April 2026. The Senate Banking Committee markup is expected in the second half of this month. When that bill passes, and I am using that word deliberately, it does not create a new framework. It codifies the one that already exists. It turns regulatory guidance into permanent statutory law. That is the difference between a domino that's mid-fall and one that's hit the ground. The Clarity Act is mid-fall. The floor is coming. And when it lands, the second batch of XRP ETF applications land with it. Bloomberg Intelligence, one of the most respected institutional research arms in the world, has placed XRP ETF approval probability at 95%. Not 60, not 75, 95%. To put that in context, Bloomberg Intelligence had Bitcoin ETF approval at 90% in the weeks before it was approved. XRP is now sitting at a higher probability score than Bitcoin was at the same stage of its ETF cycle. And yet XRP is still 61% below its all-time high. That is the gap between institutional certainty and retail perception. That gap is where the smart money positions. And that gap closes violently when the approval sequence completes. It never closes politely. Here is the BlackRock trigger sequence as Canary Capital's Stephen McClurg laid it out. BlackRock enters the XRP ETF market when AUM crosses $3 billion. Current AUM sits at approximately $1 billion. The distance between $1 billion and $3 billion at current inflow rates is not years away. It is a question of months. When BlackRock files, and I want you to remember this moment, the retail window will not wait for you to get positioned. Let me give you the current state of the thesis. Clean and precise. What has already happened? The 7-spot XRP ETFs are live with $1.44 billion in inflows. Goldman Sachs confirmed $154 million. The March 17th ruling established XRP as a digital commodity under the Clean 16 framework. And today, the OCC National Trust Bank framework went live, directly impacting Ripple's regulatory standing. What is mid-fall right now? The Clarity Act Senate markup expected this month. The second batch of XRP ETF applications under SEC review. Extension is procedural, not terminal. And the BlackRock trigger closing in on $3 billion. What hasn't happened yet? The Clarity Act enacted into law. The second batch ETF approvals. The BlackRock XRP ETF filing. And the supply shock price impact that follows all of it. The domino chain is intact. The sequence is playing out exactly as institutional capital behavior predicts. And XRP is sitting at $1.40, 61% below its all-time high, while the entire architecture of its institutional adoption is going live around it. Here is the question I want you to sit with. If Bloomberg intelligence is at 95% approval probability, what does it mean that XRP is still trading where it is right now? It means the market has not priced in the approval. It means retail has not connected the OCC ruling to the ETF thesis. It means the gap between institutional certainty and retail perception is still wide open. That gap closes. It always closes. And when it does, it doesn't close gradually. It closes in a compression event that moves faster than most retail investors can react to. The window is not gone because March 27th was quiet. The window is still open because the second and third sequences haven't completed yet. You have the OCC ruling live today. You have the Clarity Act markup coming this month. You have 7 ETFs already absorbing supply. You have Bloomberg at 95%. You have Goldman confirmed at $154 million. What you don't have yet is the BlackRock filing. And the moment that changes, everything else changes with it. Fast. March 27th came and went quietly. That is not a failure. That is a procedural step in a longer institutional sequence. The same sequence that played out with Bitcoin and made early retail investors who understood the mechanics very, very wealthy. The smart money doesn't move on headlines. It moves on structure. And the structure around XRP today is stronger than it has ever been in this asset's history. The Clarity Act is coming. The second batch approvals are coming. The BlackRock trigger is coming. And when the final domino falls, and it will fall, the retail investors who are asking, what happened on March 27th, will have a very different question. They'll be asking why they didn't position when the window was still open. This is Crypto Corner with Steve. This is the smart money ecosystem. If this research helped you see what most retail investors are completely missing right now, subscribe. Share this with someone who needs to see it, and I will see you in the next one.